Stashaway recently introduced their newest product, the USD Cash Yield. Think of this as something like their money market fund, Stashaway Simple, except this one is on steroids with an indicative yield of 5.3% a year. But if you're thinking whether you should throw all of your money here, there's a few things that you need to consider which I'll go through in today's video. First up, let's talk about the underlying fund. This product only has one underlying ETF, which is created by JP Morgan, and it holds short-term US government bonds. They also went for the UCITS version, which is essentially the London-listed ETF rather than the standard US-listed one. This makes sense because the US, they do charges a withholding tax of 30% for all dividend payouts, whereas the London one, I think it's 15% or maybe it's even a bit less. There's nothing incredibly special about this fund. We don't have to go through their holdings or anything like that because essentially it only holds short-term US government bonds, and the expiry or the maturity of these bonds ranges from the next few weeks to the next 3 months. Okay, so first I want to talk about the pros of investing into this fund. It's quite straightforward, it's simple, I'm sure some of you guys already know, but after this I'll talk through some of the things that we might want to consider before dumping all of our cash, because there are cons to investing into this product, so make sure you stay until that part so you understand all of the risks involved. The first major draw to investing into this product is of course the yield. As promoted by Stashaway, the yield right now is at 5.3%, which is pretty high. This is even higher than ASB's 2023 dividend of 5.25%. To be honest, I've been waiting for the day that one of the robo-advisors in Malaysia launches a product like this, because the US government, they're just paying such high interest rates on their bonds right now. The Federal Reserve, which is the US government's equivalent of Bank Negara Malaysia, has been increasing their interest rates over the last 2 years, so 2022, 2023, they've been increasing their interest rates to fight inflation, and the byproduct of this is that investors like us, we get to invest in their US government bonds at a very high yield of over 5%. This is as close as you can get to a risk-free asset, because the only way that you would lose money by investing into something like this is if the US government decides to default on their debt, which basically means they can't pay off their loans anymore and they decide to say, hey, we're giving up, we're going to go bankrupt. So I'm not saying that that's impossible. Of course, everything is possible, but it just seems very unlikely, because if they decide to do that, it means that the US economy has probably collapsed. So you're almost guaranteed to get this return. Even if you go to the JP Morgan website and you look for this ETF, on that page you'll see that they've locked in rates of 5.31% as of the 29th of February 2024. But like I said earlier in this video, there are risks to this, especially for us Malaysians, and I'll talk about that later on in this video. But before that, another major benefit of investing into this product is that in a way, we're investing in the US dollar. I know that there are a lot of Malaysians who have been freaking out about the Malaysian ringgit losing its value against the US dollar over the last few years, and especially in recent times. And it's a fair concern. Over the last 5 years alone, $1 has gone from 4 ringgit and 18 cents to 4 ringgit and 74 cents as of the time that I'm recording this video. So what this means is that in US dollar terms, all of us Malaysians have lost roughly 11% of our wealth just because our currency has depreciated. So for those of you guys who don't want to feel this pain anymore, then you can see this as an opportunity for you to diversify your currency exposure. So not only will you get to protect yourself against the Malaysian ringgit falling further maybe, but you'll also get that sweet 5.3% yield. It all seems good, it all seems great, but what's the downside? At one glance, even I was tempted to throw all of my cash here just because the yields are so high. Like I said, it's even higher than Amanah Saham. But there are two main factors that we need to consider, and they're kind of related. For one, let's go back to the currency. In the future, will $1 go to 5 ringgit? It seems like it's heading that way, right? The Malaysian ringgit against US dollar, it's just been falling. It seems like $1 to 5 ringgit is just a matter of when, not if. But, the alternative could also be true. Could the Malaysian ringgit start to strengthen again, and maybe it'll go back to where it was previously, maybe $1 to 4 ringgit 20 cents or 4 ringgit 30 cents? The honest answer is none of us know what's going to happen. And if you ask me, I have no idea. But if I was forced to guess, I would say that sometime this year or sometime maybe even next year, the Malaysian ringgit will start to strengthen against the US dollar. And this is super important for us Malaysians when we decide to invest in this product, because what matters the most to us is the Malaysian ringgit. We can make as much US dollar as we want, but for as long as we live in Malaysia and we spend in Malaysian ringgit, that will be what matters to us most. Because you can make as much as you want, but at the end of the day, when we want to enjoy this money, we'll have to withdraw it and convert it back to the Malaysian ringgit. So let's say you invest in this fund today and the conversion rate is $1 to 4 ringgit and 75 cents. After 1 year, you make your 5.3%, whatever it is, and you're happy because you made more money on your US dollar. But let's say at the time that you want to withdraw your money, the Malaysian ringgit has strengthened so that $1 is now 4 ringgit and 50 cents. In this scenario, you'd actually make close to nothing. You might have more in US dollar terms, but once you convert it back to Malaysian ringgit, just because the Malaysian ringgit has strengthened, our net profits from this entire investment is basically zero. Making this investment isn't as straightforward as something like Stashaway Simple, because now we also have a currency factor that we need to think about. We actually need to try and think where the currency rates will go. Is the Malaysian ringgit going to strengthen? Is the US dollar going to strengthen? Basically, if the US dollar strengthens, we win. If the Malaysian ringgit strengthens, we lose. The next thing that we'll have to consider is that the US Treasury yields, it's not guaranteed, it can fluctuate over time. It just completely depends on the US bond market. So you can see it in this chart as well. Right now, the 3-month US Treasury bill is paying us 5.36%, but 6 months ago, it was paying 5.5%. It's not a huge difference, but you can see here that it does change over time. And these high rates, they might not last forever. So a lot of people, they're betting that the US government this year, they will cut their interest rates, and the US Federal Reserve, they've basically been saying pretty much the same thing. And because these are short-term government bonds, as soon as the Federal Reserve decides to cut their rates, the yields on these bonds, they will fall as well. So don't think of this as some sort of long-term investment that you can just dump all of your cash here, not look at it anymore, and then come back in 30 years time when you're ready to retire, because these rates, they will change, and it can change by quite a lot. In 2022, which is just like 2 years ago, 1.5 years ago, the interest rates on these bonds, it was only 0.1%. I don't know about you guys, but if it was ever back to that level again, then there's literally no point for us to invest here. Having said all of this, what would I do? So the good news is, these two risks that I just mentioned, they're actually kind of related. So think about it this way, this product is actually a perfect example of what might happen. So let's say we are a Malaysian investor and we want to invest in government bonds. We have two options, the Malaysian one, which is paying 3% right now, I think, or the US government bonds, which is paying 5.3%, like we just saw and like we're seeing with this product. Obviously, 5.3% is higher than 3%, so we want to go for the US government bond, which means we need US dollars, so we buy US dollar and we sell Malaysian ringgit. And that basically means that the US dollar becomes stronger, the Malaysian ringgit becomes weaker. If you guys don't understand this part, basically in a nutshell, because US interest rates are so high, the US dollar is also becoming stronger. Anyway, back to the topic. So my expectation is that as soon as the US government or the US Federal Reserve decides to cut their interest rates, this investment, it won't be so enticing anymore. For one, like I said, as soon as they cut their interest rate, the yields on this product will fall. So I think most people are expecting it to go from the current levels of around 5.3% to I think around 4.5 to 4.75% by the end of this year. And the follow-up effect from this is that the US dollar will also start to weaken against other currencies, including most likely the Malaysian ringgit. So basically, in a nutshell, as soon as the US government decides to cut their interest rates, it's probably time to consider cashing out your investment because you might lose on both ends. To summarize, this is a pretty cool product in my opinion that Stashaway has just launched. It gives us Malaysians the opportunity to sort of hedge our currency to something like the US dollar, just because the Malaysian ringgit has been so weak over the last 5, 10, 15 years, I think. But it also gives us a chance to invest in something that gives such high yields for a pretty low amount of risk. But on the other hand, like I said, this could also be cons because the yields, it could drop, and the US dollar, if it drops, it will also be harmful for us when we invest into this product. So yeah, it really depends on you whether you want to take this risk, but at the end of the day, you could not make as much as you expected, or even worse, you could even lose money when you convert it back to the Malaysian ringgit. Personally, this is something that I don't really want to manage, so I think I'm going to stay out. I'm not going to invest into this product. The only thing that will make me reconsider this is if the US government decides not to cut interest rates this year, which, to be honest, it seems more and more likely these days. In my opinion, this is more of like an investment rather than somewhere that we would just throw our money and just let it grow on its own, like Stashaway Simple. It's not really similar because, it could work out, it could not. It's just completely up to you where you think the Malaysian ringgit will go in the future and whether the higher returns are worth the risk. So let me know, would you guys invest in a product like this? On one hand, you could get higher returns over 5% for relatively low risk, but on the other hand, you could lose out if the US dollar depreciates after you invest your money. Anyway, thanks for watching this video to the end, guys. Use our link if you want to sign up for Stashaway. I'll leave it down below. It really supports the channel. I appreciate it. Give us a huge thumbs up if you enjoyed this and subscribe to our channel if you haven't already. See you guys in the next one. Peace out.